So Bitcoin is shaking out the weekends before we move higher. That's the only reasonable explanation because we've seen it happen time and time again. Of course, that is the talk of the town this week as Bitcoin has rocketed up, $20,000 in the last 2 months. Year to date, it's the best performing asset on an absolute basis, on a dollar for dollar basis, and on a risk adjusted returns basis. It is a sharp ratio of 2.1, which beats out every single asset, in the United States dollar capital market, financial market complex, all 11 U.S. stock sectors, every single major stock index. So it's doing extremely well. And as such, people want to know what on earth is going on. Well, to explore that a little bit, first we need to take a look at what exactly happened. So take a look here. Bitcoin reached its new all-time high price of just above $69,000, about $69,100 and some change. And of course, it only hit that for all of 30 seconds. We bounced all the way below 60,000 and we're back up to 66,000. So of course, people who are new to Bitcoin, of which there are many, are getting their sea legs in with Bitcoin's hallmark up, down sort of price action. Well, why on earth is this happening? We'll talk about that in just a second. To give you another visualization, Dylan LeClaire put this chart together. This is the difference is actually quite funny. This is the difference between the daily high and daily low. Now, for a while, we've been talking about the God candle, the $10,000 candle within a single day. Of course, that's not something we rarely ever see here in Bitcoin. I don't believe we've ever actually seen it. Many believe that we would see it on a day when the price goes up. And actually, the first $10,000 candle we saw was the price nuking. This is very interesting, and it begs the question, why is this happening? Well, one thing we know is that this is not as a function of these new ETF investors getting scared and selling their Bitcoin. In fact, it's quite the opposite, with Bitcoin ETF inflows actually reaching a new all-time high of $1 billion just yesterday. That's Tuesday at the time of recording this video, clocking in at about 995 million. Take a look at this breakdown I made here. This is every single vehicle. And you could see that down below, the assets under management fell, but that's only because the value of the Bitcoin that these ETFs hold fell. You could see that there were gargantuan net inflows over to the far right. You can see that it is dwarfed every day previously. So more than any day previously, investors are still piling into Bitcoin, even as Bitcoin threatens all-time highs. So clearly, ETF investors are totally unfazed by yesterday's dump. They're still accumulating in earnest. This sell-off has nothing to do with them, and it wouldn't have anything to do with them even if they were net selling on the day, because this was an intraday sell-off. And the way these ETF vehicles work, just like any other ETF, is at the end of every single trading day, the underlying asset is bought or sold depending on all the buy and sell orders throughout the day. And then that is when you see action in the underlying spot price, not during the day when these ETFs are trading. So it wouldn't have been anyway. So for the future, just know that any volatile intraday price action, we're talking Eastern time, the best time, 9:30 a.m. to 4 p.m. every single day. There's volatile Bitcoin action. It doesn't have anything to do with ETFs buying and selling. You'll note here as well, just to highlight the strength of wrong chart, just to highlight the strength of these ETFs. Volume, the volume record was absolutely shattered. It hit $10.6 billion yesterday, which dwarfed its previous daily high by about 30%. Boomers and other people who are investing in these vehicles, people who are locked away in retirement accounts, people who are locked away in tax-deferred savings accounts of other kinds, absolutely love the corn. That is very clear to see. It's noteworthy, too. This was pointed out by Amy Nixon, very brilliant analyst. You guys should give her a follow at Texas Runner DFW. She pointed out that ETF investors are typically older conservative types, many of whom are buying Bitcoin as insurance, and they're buying it with a small allocation. And that's good to hear, knowing that these ETF investors are investing in Bitcoin for what it actually is, which is the best performing monetary debasement hedge, not just year to date, but at any point over the last decade for the most part. Knowing that they're buying it as insurance instead of a high beta risk asset that they're trying to get some directional exposure to is good. That means Bitcoin from a long-term perspective is more stable thanks to these ETF buyers rather than more volatile. If these ETF buyers were trying to hop in for some kind of directional risk bet like day traders do, and like Bitcoin's very extensive futures market does as well. That is what led to a lot of the price pitfalls, the huge liquidation spirals that we had in previous cycles, knowing that these older conservative types are not spooked by sudden spikes in price action, by sudden falls in price action. In fact, they'll gobble up Bitcoin in the event that huge price decline happens. That's very, very reassuring for Bitcoin's price. And it tells us that this is a much more stable jumping off point than what we've had previously. So the question is, if these ETFs bought, almost $1 billion in new Bitcoin, then who on earth is selling? Well, my thesis, and again, the way that I'm constructing this is data, obviously, but also Occam's razor, right? The explanation that posits the fewest number of variables is preferable to the explanation that posits more. That just means the simpler, the more likely it is to be the truth. And in this case, chances are Bitcoin has been underwater since late 2021. Okay, so I'd imagine that there is a massive wall of sell orders that have been placed at this level from 68 to from 66 where we are now to 69K. People who have been extremely underwater with their investments, 60, 70, 75% down from the all-time highs, and they just want out. And so obviously, there's a cohort of people who have been holding and waiting till we get to these levels, and they're going to continue holding. But I'd imagine an equally big, if not bigger, cohort of automatic sell orders have kicked in now that we've reached 69,000. And of course, a lot of people jumped onto the sell trade as we started moving lower. Some of those people with weaker hands. Of course, it's good that we get those people out of the market. Once these folks who've been underwater for 3 years, once they get out of Dodge. Once that's totally exhausted, we have the groundwork to move higher, particularly with this huge passive bid that's increasing in its total size every single day, coupled with the fact that we no longer have these bucket shops around, the FTXs, the Celsiuses of the world. All of those have gone the way of the dodo. You'll see here, this is a very, very good way to illustrate it. We hit this same level, roughly $9,000 in 2021, as you know. But it was built on top of a totally unstable foundation, built with a great deal of derivatives, a huge amount of lending, unsecured lending, bucket shops like FTX and Celsius, whose assets were fake, and all of this extremely bad leverage that was baked into the system at the time. It meant that once we hit this $69,000 level, we fell immediately. And as soon as the price started moving against the market, then the market collapsed. Now that these players are out of the picture and nation states like El Salvador have increased their allocation, businesses like MicroStrategy are quickly jumping into the game. Like we see here, they announced another $600 million worth of convertible they're doing a $600 million convertible bond offering, which went on sale today, and chances are it's going to be extremely highly in demand in order to buy more Bitcoin. That's been MicroStrategy's strategy. So you have nation states increasing their allocations. You have companies who are speculatively attacking the dollar by issuing bonds. As their stock price does very, very well, they issue more bonds against their stock in order to buy Bitcoin. That's the strategy that's worked out for MicroStrategy, and it has allowed them to outperform even stocks like NVIDIA over the last few months. Year to date, MicroStrategy, I don't have the chart up, but you could look at my Twitter profile. If you're watching this on my Twitter, if you're not, go to my Twitter and take a look. It's one of my most recent charts. MicroStrategy is performing all mega cap US tech stocks year to date. And that's because of this strategy. And so these businesses, more and more businesses, you can bet, are going to take a look at that and want to operate on a similar Bitcoin standard, or at the very least, engage in some kind of strategy to issue debt, just as MicroStrategy is doing, in order to buy Bitcoin. Their stock price appreciates because of the outsized performance of Bitcoin. People start to view their stock as sort of Bitcoin beta. Their stock goes up, they can issue more bonds and then buy more Bitcoin. It's very easy, and MicroStrategy is doing this at a very low interest rate because they've showcased their ability to pay back creditors, pay back creditors time and time again very easily in the past. So this has worked out tremendously for them. You can bet other corporations, thanks to the new accounting changes as well, that make it much easier to hold and account for Bitcoin as a taxable asset on their balance sheet. You could bet more companies are going to be jumping on this trend. So nation states are on board, more companies are on board, and now you also have Wall Street on board, guys. Okay, we talked about this huge passive bid, almost $1 billion a day flowing into these vehicles. And you can bet as that Sharpe ratio continues ticking higher and higher and higher, Bitcoin continues to be the best performing asset on a risk-adjusted basis. You could bet that those ETF flows are going to break past 1 billion and regularly be above 1 billion, I think, on average for the lifetime of these vehicles. So you have a rising passive bid, all that Wall Street money. BlackRock is even looking to expand the amount of its funds that have exposure to Bitcoin. They want to include Bitcoin exposure in their other funds, and they're adding spot Bitcoin products to their $36.5 billion bond fund. So the amount of capital that can be deployed into Bitcoin from Wall Street is only increasing. So now you have nation states, you have Wall Street, you have companies like Michael Saylor's MicroStrategy and others who are looking on and want to get that exact same price appreciation that has been taken, that has been allowed for on a Bitcoin standard. That's much more stable than where we were in 2021. And so all told, right now, this is just a transient period where we're shaking out the weaker hands before inevitably moving higher. And then that begs the question, well, how much higher? Where are we going? And with this reality of a much more stable foundation and all-time highs literally right here, we're just in the process of the people who want to get out getting out and the people who want to buy taking those coins that they're parting ways with. And once that changing of the guard of sorts happens from weaker hands to stronger hands, then we move higher. Right? This passive bid is reality. This increased Wall Street interest is reality. And of course, momentum throughout markets is extremely strong right now. So Bitcoin not only has its Bitcoin native factors going for it, but also market-wide risk-taking sentiment going on right now. And so then it becomes a matter of, okay, we're nearing these all-time highs. After we break an all-time high, after we break a previous all-time high, where are we going? Well, again, we'll close out with this. According to Dylan, the time that it took Bitcoin to double after previously breaking all-time highs have been 18 days in 2020, 84 days in 2017, 10 days in 2013, and then earlier in 2013 when we had the double top, just 18 days. And so historically, it has taken on average less than 3 months, on average less than 2 months for Bitcoin to double after previously breaking an all-time high. I wrote a piece a few weeks ago for my other publication you could find linked in my bio, The Bitcoin Layer, how $100,000 Bitcoin is closer than you might think. And of course, I don't tend to throw around these monikers very often. I don't like to be hyper sensational, but the reality is Bitcoin has this tendency to double after breaking previous all-time highs. Now, of course, as Bitcoin's market cap has grown now to $1.3 trillion, higher than silver's market cap, it becomes more and more difficult to do that. As Bitcoin becomes a larger asset, it will become much less volatile. These huge intraday price swings are going to become more muted, but the reality is Bitcoin has a tendency to run when it runs. And right now, we are on the precipice after we shake out these people that no longer want to be here, that want to get out of Dodge, break even after they bought the top last year. We're going to move much, much higher. And when Bitcoin moves, it moves. And so the chances that we see six-figure Bitcoin, $110,000, $120,000, $130,000 Bitcoin, ceteris paribus, as long as markets remain intact, is very, very high. That's all for today's video, everybody. I hope you enjoyed. Make sure, if you're watching this on Twitter, to follow. Of course, check out Theya.us, your keys, your Bitcoin. We offer best-in-class Bitcoin multisig self-custody vaults, so you could take your Bitcoin seriously. Now that Wall Street is holding Bitcoin, the likelihood of some kind of civil asset forfeiture has never been higher. You want your Bitcoin to protect your wealth and your family's wealth for future generations. So make sure you're holding it properly. Check out Theya.us to learn more, and you could also download it directly from the App Store. And for those of you that have been asking, an Android app is in fact coming soon. Again, make sure you follow whichever Twitter account you're watching this on, mine or Theya's. Make sure you follow them both. And of course, subscribe to the YouTube channel if you're watching it there, and hit the bell icon so you don't miss out when we post new videos. That's everything for today. I really appreciate it, you guys. Enjoy this price action, and I'll talk to you later. Bye.